In this video, we are going to be talking about taxes as an Amazon seller. Let's jump right into it. What's going on YouTube? Welcome back to my channel. For those of you who are new, my name is Brad Sherman, and on this channel we explore tips, strategies, and experiences that I have had that will help you start and build up your Amazon FBA wholesale business. In this video, we are going to be having a discussion about taxes. We will be covering a high-level overview of taxes as an Amazon seller. If this is your first year selling on Amazon and you made some money, you are going to be subject to paying taxes on that profit. Before we jump into it, make sure to smash that like button if you enjoy the content that I'm putting out, and hit that subscribe button and notification bell as well if you would like to stay up to date on all future content that I put out. Without further ado, let's jump right into it. Right about now, it's time for my quick disclaimer that I am not an accountant, nor is this accounting or financial advice. This video is for entertainment and educational purposes only, so make sure to always do your own research and consult a professional. Because we're approaching the tax deadlines, I thought it would be great to make a video for you guys covering some details on filing taxes, tips and tricks for Amazon sellers, and what you need in order to file taxes for your Amazon business. To start off, we have our business tax deadline, which is on March 15th, in comparison to the personal tax deadline, which is on April 18th. In Amazon Seller Central, if you sold over $20,000 worth of gross sales or had over 200 transactions, you are going to be issued what's called a Form 1099-K. And you can see from the pop-up on the screen, you'll be able to access this form in your seller account by going to Reports and then going to the Tax Documents Library, and then you will see your 1099-K for the previous tax year. Now, if you do not have one, that means you did not meet the threshold, so you don't have to worry about anything. For those that did meet the threshold, you're going to be issued this form, download this as a PDF, and send it to your accountant because they will need it when doing your taxes. I just want to cover 3 different types of business entities and how it relates to taxation. We have sole proprietorships, LLCs, single member or multi-member LLCs, and then we have S corporations. There's also C corps, but we're just going to be covering the first 3 in this video. As a sole proprietorship, you are the business. There is no separation between yourself and your business. What an LLC accomplishes is it gives you limited liability protection. So let's say you sold an item on Amazon and God forbid it was a baby toy and someone's child choked on that item. In that instance, if the customer attempted to sue you when you have an LLC, that customer can only come after your business assets and cannot seize your personal assets. That is why having an LLC is a smart decision as a business owner. When you have a sole proprietorship, you do not have that limited liability, so God forbid that situation happens, you will ultimately be liable for any charges that are put against you for that situation. Pertaining to taxes, as a sole proprietor, you are subject to what's called the self-employment tax, which is 15.3% of your profit, of your bottom line profit. So take whatever you made for 2021 and take 15.3% off of it, because that is what's going to the federal government in self-employment tax. Income then gets carried over to your personal income tax return. You are then taxed according to the pop-up chart that you see on the screen, and this is according to your income tax bracket level based on all income that you've made. So it's your taxable income after, whatever other jobs you have, your business income, whatever all your income is, your taxable income after your standard deductions and whatever deductions are applicable to you is taxed according to the income tax bracket. Pertaining to business purposes, if you are a sole proprietorship or if you are an LLC, that applies to both single and multi-member LLCs, you are taxed at a rate of 15.3% for the self-employment tax. What is comprised of this 15.3% is 12.4% goes to Social Security and 2.9% goes to Medicare. The third type of business entity is an S Corp. Now keep in mind, you can be an LLC and elect for taxation as an S Corp. With an S Corp, you are putting yourself as a business owner and any other employees that you might have on payroll. And what this accomplishes is it enables you to write off your payroll as an expense on your business. So you, according to the IRS as a business owner, can take a reasonable salary from your business, write it off as an expense, thereby reducing your taxable income or profit. If you're just starting out and you're not really generating that much income, an S Corp is probably not going to make sense for you. But if your company has grown quite a bit and you are doing some pretty large revenue and profit numbers, talk to your accountant about being taxed as an S Corp because it might make sense for you. Now, on this payroll expense, you are paying yourself a salary, and therefore your taxes are getting automatically processed by whatever payroll service provider you use and submitted to the government for tax purposes. Just to give you guys a brief overview of the content that we've just covered, business tax filing deadline is due March 15th. Personal tax filing deadline is due April 18th. There are three major types of businesses: sole proprietorships, LLCs, whether it's single member or multi-member, and S corporations. The difference between LLCs and sole proprietorships versus an S corp is that with the two former types of businesses, you are subject to paying the entire 15.3 self-employment tax. With an S corporation, you are paying half of that self-employment tax, and the company or your business is paying the other half of the self-employment tax. Guys, I cannot emphasize the importance of staying organized and keeping your books in order at the ground level, because once you start to grow and do more volume in your business, it's just going to fall apart. If you are not organized at the ground level, you are not going to build a successful business long term. There are great tools out there such as Inventory Lab that automatically pull from Seller Central and track your profit so that you can generate a profit and loss sheet for the year. If you guys enjoyed this video, make sure to smash that like button, hit that subscribe button and notification bell as well if you do want to stay up to date on all the future content that I put out. Thank you guys so much for watching. Stay safe, stay healthy, and we will see you next time.